Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, February 4th, 2019. So we'll go over a couple different charts today in this video. First, I want to talk about Google since they report earnings after the bell. One thing you can see is the stock is trading up about $21 going into earnings. What's interesting about this is it's very reminiscent of what Amazon did going into earnings. If you look at really just the last 3 or 4 trading days, Google's gone from approximately 1070 to now 1140 on the charts. So again, you're talking about a $70 move up just in the last few days going into earnings. What that tells me is that expectations have been ratcheted up for this current quarter that they're going to report. So they better have a fantastic, amazing quarter if the stock's going to go higher. I think the upside is somewhat limited. I have a key resistance point right here, which you're very, very close to, and then a secondary one right here. So I think, you're talking maybe $20 further of upside on Google. But if it misses or disappoints, there's about, to be honest, potentially back to 1070 as downside risk. So in terms of risk reward, there's only a little bit of risk here. Again, maybe $20 of risk versus about a $70 reward to the downside. Now, that doesn't mean it can't go up to $20, but ultimately they better have a very good report to justify this recent move to the upside. Okay, so that's the first chart I wanted to go over, and again, those earnings will be out after the bell. The second one I wanted to go over was the S&P 500. So if we bring up the S&P 500, you can see it continues to advance towards that 200 moving average. So that's the likely target at this point. What I say to members here at InTheMoneyStocks.com, which is some wise words, is that once you get close to a moving average like this or a gap fill, it works like a magnet. So you'll see that enough traders and algorithms start spotting that where it just kind of drives price to that level. So again, that's my expectation at this point, is that we're going to trade up. I also think volume this week could be a little bit on the lighter side. Not only is today extremely light with only about 29.7 million shares traded here. We only have about an hour and a half left in the trading day at this point in time, but China is closed this week, so really what that tells you is that you're not going to get any sort of major trade news out this week on China, which is going to keep volume a little bit lighter. And let's be honest, earnings are essentially coming to a close. After Google reports today, there's only a few other big-name companies out there that are going to report, but really the big ones like Apple, Amazon, and so forth, they've all reported at this point. Google after today will have reported. So again, you're kind of losing the earnings catalyst for volume. Then you don't have China until next week, catalyst of volume. So really what's left? I mean, we heard from the Fed already about a week ago or so, so that's over. There's not a whole lot else to drive volume. So again, that just leads me to believe that the markets probably stay neutral to slightly higher until we get to that 200. What's going to be interesting is, does that 200 moving average, which currently trades around 273.90 to the 73.80 on the spiders here, do we see that coincide with the end of the week, and then the next week when China resumes trading, is that where the market gets more volatile? Do we see that volatility re-emerge? So that's, again, my general thought process from what I'm seeing in the charts right now. And again, the volume today is super light, not only because of those factors I mentioned, but the markets, let's be honest, there is a hangover from the Super Bowl. A lot of people drinking and eating a lot in the evening of Sunday, so that kind of makes people a little bit slower early in the week here. Okay, a couple other charts I want to look at. Number one is SMH. SMH, same thing. I'm going to look to pull, probably do some put options on the SMH when it gets to this 100 even number here. You see the daily 200 moving average. You also see multiple pivots right in this range that will work as very significant resistance. So this area just above 100 is going to be extreme in terms of resistance for the SMH, which is the semiconductor ETF. And in my opinion, that's where you want to play puts. Probably buy 3 months out, something like that. Well, probably $100 puts. I like to buy generally around the money. I don't like to do way out of the money because, again, you need a gift from heaven just to get those to even go in the money a little bit. So, again, paying out outside or right around that strike price is the best policy for me, at least when I trade options. Okay, other than that, a couple other things to note here as I scan through. We're not seeing a whole lot of other movement out there, but Microsoft is bouncing back after a pretty nasty late portion of the week. You can see that stock's up about 2.7%. But again, to me, this chart is borderline broken. I mean, in my opinion, The earnings were not very good. You saw the price action off of earnings. You saw down Thursday, down Friday. It is bouncing back today because I think the light volume euphoria, people are kind of just jumping back in because it's been one of the leaders in the big tech area. But again, I don't expect it to have much bite going forward. As soon as this market turns down, this actually is going to be one of the leaders to the downside, in my opinion, because of the price action. Lastly, I want to just point out one chart I like on the short side here. It's Cisco Systems. You can see it filled a gap right here, so it has filled the gap. You got the doji on Friday, and my guess is you're going to head back towards these moving averages in the coming couple weeks. So again, likely a top out in play on Cisco to the short side for some downside action. All right, on that note, folks, I'm going to step aside, but I do want to just mention here real quick that I did take a profit of 28% today on the Riot blockchain. It's one of the few stocks that I do trade in the small cap land. But again, what I can show you here, here's our website, and it's already been posted on the track record here. Here's our track record so far. These are trades taken in 2019 and closed out in 2019. So you can see already just off to a stellar start on the track record, verified track record right here. And again, you can see I bought Riot on the 23rd, sold it today at 210 for a beautiful 28%. VXXB, we had a recent trade on that for 10%. OSTK, Sohu, UNG. I mean, that was a great UNG trade too, 17%, just a fantastic move. So already 2019 off to a stellar start. If you want to get involved, folks, I encourage you to come to inthemoneystocks.com. And the beauty of it is there's my logged in account there. And if I log out, this is what you guys would see. You can go to Research Center right here, take the 7-day free trial, and get these trades just like I showed you. Those are trades that I put out, time-stamped, everything in the Research Center. And again, you get everything listed under here when you sign up to the Research Center. It's pretty cool. And again, a 7-day free trial. So get involved here, guys. Come join us at inthemoneystocks.com. We will talk to you soon and see you in the profit-making action. Take care.